Payroll mistakes don't just frustrate your employees, they can cost your business thousands of dollars in penalties, damage your reputation, and even trigger an IRS audit. Here's the reality. Studies show that nearly 40% of employees will consider leaving their job after just 2 payroll mistakes. Think about that. You spent all this time finding the right people only to lose them because payroll wasn't handled correctly. I've seen it firsthand. One client came to me after missing a single tax deadline, and it cost them thousands in penalties and interest. Painful, but totally avoidable. I'm Noel Lorenzana, a registered CPA and one of OnPay's expert contributors. I've worked with countless small businesses, and today we're breaking down the biggest payroll mistakes I see all the time, and more importantly, how to avoid them. One of the biggest payroll mistakes I see small businesses make is misclassifying employees. It usually happens when a business owner thinks, if I call them a contractor, then I don't have to pay payroll taxes or benefits, and it'll save me money. But here's the problem. The IRS and the Department of Labor take worker classification very seriously, and it's not a choice you get to make. If someone works under your direction, uses your tools, follows your schedule, and relies on you for steady income, they're probably an employee, not an independent contractor. And if you get this wrong, you could be on the hook for back taxes, penalties, unpaid benefits, and even legal problems. I've seen cases where a simple misclassification ended up costing a business tens of thousands of dollars. The good news is, with the right system in place, you can handle employees and contractors correctly and avoid the IRS headaches. Another mistake that can really hurt small businesses is missing payroll tax deadlines. When you run payroll, you're not just paying employees, you're also acting as a tax collector for the government. That means sending in federal income tax, Social Security, Medicare, and state payroll taxes by very specific deadlines. Here's where the problem comes in. Those deadlines come up faster than most business owners expect. For example, Form 941, the quarterly federal payroll tax return, is due the last day of the month after the quarter ends. Miss that date, and the IRS can hit you with penalties starting at 5% of the unpaid amount plus interest. I've seen cases where a small business owner was just a few weeks late and ended up owing thousands in penalties and late fees, not because they didn't want to pay, but because they were busy running the business and the paperwork slipped through the cracks. A good practice is to keep a payroll calendar with all federal and state deadlines marked and review it at the start of each quarter. Even something that simple can save you a lot of stress and money. One more thing. Always, and I mean always, make your tax deposits. Don't ever be tempted to borrow from them if cash gets tight. I mean, I get it, it's tempting, but trust me, the IRS will come after that money relentlessly, even holding you personally responsible. Another payroll mistake I see all the time is not paying overtime correctly. By law, most non-exempt employees must get time and a half for any hours worked over 40 hours in a week. But small businesses often slip up, either by misclassifying someone as exempt or by not keeping reliable time records. And now with the new no tax on overtime provision from the big beautiful bill, it's even more important to get this right. Starting in 2025, you'll need to accurately track and report overtime on your employees' W-2s. If you want to learn more about the big beautiful bill, we've got a full breakdown in this video right up here. The consequences of getting overtime wrong is that they add up fast. The Department of Labor recovers hundreds of millions of dollars every year in unpaid wages, much of it tied to overtime violations. I've worked with businesses who thought they were saving money only to end up owing thousands in back pay plus penalties. Most of the time it's not intentional. Owners are just overwhelmed or relying on outdated systems. But employees know their rights, and when payroll mistakes hit their paycheck, trust is broken and problems escalate quickly. Here's a pro tip. Review your overtime classifications and policies at least once a year and make sure hours are tracked accurately. A little proactive effort can save you from a huge mess later on. One of the fastest ways to lose employee trust is late or incorrect paychecks. Your team depends on their pay to cover things like rent, groceries, and bills. If payday comes and their check isn't there or the amount is wrong, it creates instant stress. Studies show that nearly 40% of employees would consider leaving their job after just 2 payroll mistakes. I've seen it myself. A business was just a few days late paying their staff, and within weeks, good employees were updating their resumes and looking for other opportunities. All the time and money that business spent hiring and training, wasted because of a preventable payroll error. The damage goes beyond compliance. It's about trust. Employees remember how you handle their paycheck, and if they can't rely on you to get it right, it impacts morale, productivity, and retention. One way to stay ahead of this is to double-check payroll before each run and keep a simple checklist verifying things like hours, salaries, deductions, and payment dates. A little consistency goes a long way in keeping your employees confident that they'll be paid correctly and on time. Another mistake that doesn't get enough attention is poor payroll record keeping. The IRS requires employers to keep employment tax records for at least 4 years. That includes employee details, tax filings, and proof of wages paid. And if you ever get audited, the very first thing the IRS will ask for is documentation. I've seen business owners scramble during audits because their records were scattered across multiple folders, stored in email attachments, or literally stuffed in a shoebox. Not only does that create unnecessary stress, but missing or incomplete records can lead to penalties and make the audit process a lot tougher. The key here is organization. Keep payroll records in one place and make sure they're backed up. A good practice is to review your files at least once a year to confirm you have everything in order. That way, if Uncle Sam ever comes knocking, you're ready. One payroll tax that often slips through the cracks is not reporting new hires and not handling wage garnishments properly. Almost every state requires you to report new employees within a set number of days. These reports help with things like child support enforcement and keeping tax records accurate. But many small businesses either don't know about this rule or simply forget, and that can mean fines or compliance problems down the road. Then there are wage garnishments, which are court-ordered deductions from an employee's paycheck, usually for things like child support or unpaid debts. If you don't calculate these correctly or you miss a deadline, you can end up in serious legal trouble. I've seen employees get hit with penalties just because they didn't follow the exact instructions in a wage garnishment order. We have another video on the topic of wage garnishments, which we'll add in the comments below. So the best way to avoid problems here is to stay organized, have a process in place to immediately report new hires, and to carefully review garnishment orders as soon as you receive them. Double check the details, percentage limits, start and end dates, and document everything. It may not be the most exciting part of payroll, but ignoring it can lead to some very expensive mistakes. So here's the big picture. Payroll mistakes are common, but they don't have to be. Whether it's misclassifying employees, missing tax deadlines, overtime errors, late paychecks, poor record keeping, or compliance slip-ups like new hire reporting. Every one of these mistakes is preventable. The key is having the right process in place, and that's where OnPay really helps small business owners. It automates payroll, files your taxes, handles compliance details, and keeps everything organized so you can avoid costly mistakes and focus on running your business. By the way, you can try OnPay's tools for free for 30 days. Check out the link in the description for more information and a link to sign up. Payroll doesn't have to be stressful. With the right partner, it can actually be simple. Thanks for watching, and I'll see you in the next one.